Todd, you have not read through either of these. Is that fair to say? Either of these shareholder letters?
I'm stoked that we're doing this again this week. That was a lot of fun last week. Hopefully listeners liked it. If you want us to keep doing these things, drop a note in the comments, and that way we know, okay, this is what people want to hear. We'll continue to do it. But I thought it was a lot of fun. So yeah, I have not, Joe. I haven't looked at either of these press releases. I have no idea if these, I know nothing.
Yeah. So we're going to look at Airbnb and we're going to look at Coinbase. So let me screen share here and we'll start with Airbnb. How's that?
Yeah, that's perfect.
All right. Bring it on. All right. So I did hear just a little bit about this. I obviously their numbers generally are still much below 2020 or pre-2020 levels, but their bookings up slightly, still not a lot, but I think the impression is they're going to dig themselves out of that hole pretty quickly. Personally, I'll believe it when I see it. They are still far from being profitable, as I think we all know.
I'm looking at this list. One of the first things that jumps out to me, and listeners, we do post these to YouTube. If you want to follow along YouTube when you get home, pull us up, Lyman Alpha Talking Stocks on YouTube, and you can follow along with what we're looking at on the screen. And, one of the things that jumps out to me here, Joe, is that they don't put revenue as the first line item. No.
Yeah.
No. They're putting it as nights and experience book at the top, followed by gross booking value, then revenue, and then of course last loss, right? So this is what we want you to focus on up here, this nights and experiences booked. And hey, you know what, Joe, though? I don't mind double digits, 13% year over year. I'm actually a little surprised it's not stronger. I mean,
me too.
You're gonna tell me that, okay, so year over year, well, it was the first quarter, so maybe you had some strength in the January, February before people really started to wake up to the COVID shutdown. So maybe what you'll see, Joe, is a huge acceleration in the Q2 numbers.
Yeah.
Because maybe
I would think so, just because judging by what happened last year, like I remember like college spring break and just generally school vacations up until I feel like the end of March weren't really affected. Like I remember people were like still on vacation as everything was kind of shutting down. And so I think that if people had something booked at least up until like the end of March, probably, which would be the end of the first quarter, right, that it probably was not affected all that much. So yeah, I guess that makes a little bit more sense.
Yeah, I think we'll see a huge year over year jump in bookings in Q2. And
not to say that we'll see a huge year over year jump in this net loss turning into a profit or anything down here. I'm very skeptical of that myself.
Well, let's dig into it some more here. Okay, so we had the nights and experience books were 64.4 million. That's up 13% year over year. The gross booking value. Okay, so how much of those nights booked, what's the value of that? That 10.3 billion, that's up 52% year over year, which is interesting to me. Maybe there's some slightly higher prices.
Or it could be people going for longer periods of time.
Or even upgrading because they've got a little extra money in their pockets and they're doing
true,
nice.
Yeah, a nice little stimulus check, or just, they've been working from home and haven't been incurring a lot of costs. Certainly possible.
And then you see that revenue, Q1 2021 revenue was up 5% year over year to 887 million, up 3% on constant currency basis, which simply means that they're adjusting out any because you can book Airbnbs anywhere in the world. So adjusting for currency was up 3% year over year, if it was constant currency, and 5% year over year if you don't adjust for the currency impacts. So yeah, okay, so more people booking than they did last year, a significantly higher gross booking value. And then the revenue up slightly, but like you and I just talked about, the Q1 comparison maybe isn't nearly as weak as the Q2 comparison might be. And then that big, you've mentioned already, kind of hinted at it, that big net loss, 1.17 billion in the first quarter. Although it looks like 380 million of it was related to the repayment of debt, which is never a bad thing. 292 million non-cash mark-to-market adjustment for warrants, and 113 million expense related to lease no longer deemed necessary. So there are a lot of one-time items in that 1.2 billion loss. All right, what else we got here? If you scroll down.
Sure.
So adjusted EBITDA, earnings before interest, taxes, deductions, amortization, loss of 59 million. But that they say that was materially improved from a year ago, although they don't give us the year ago number here. But they do say it's at the end of the letter. We'll get to it. Okay.
All right. So yeah, 2020 was a year none of us will ever forget. Yeah, we get it. Cliches. All right. So this is basically just what we were looking at before with a little bit
go
more
scroll
detail.
Up a little bit though.
Oh, yeah?
Scroll up to right there. Man, this is what we were talking about. This revenue is driven by strength in North America and higher average daily rates during the quarter.
Interesting.
So,
I wonder why that is.
That's interesting. So, maybe that's just people have more pricing power now. Be interesting to see how much capacity is actually open. I know it's really tough. I tried to book something for the summer. It's really hard to find what I'm looking for.
Yeah, now I know the summer is just supposed to be insane. We have some pretty touristy areas near where we are in New Hampshire, and I know they're expecting record-breaking numbers this year.
And then if Joe, look at that next line that next bullet where it says significant items impacted Q1 21 net loss. That we were just talking about that. So that net loss, the headline number is scary, but 782 million of that 1.17 billion are theoretically non-recurring or one-time things.
Yep.
And here's the comparison that I wanted in that adjusted EBITDA.
Yeah.
Oh, that's a pretty market improvement.
That is quite the improvement. 59 million from a loss. So loss of 59 million up from a loss of 334 million in Q1 of 2020. So that's significant. Increased
marketing efficiency. That means that they're just spent less on marketing. and maybe targeting is getting better, but yeah. I mean, let's put it this way, Joe. I mean, how much does Airbnb really have to market right now? I mean, if you're looking for a place to go, it's gonna be one of the top 3 places you pull up to look.
Yeah.
Without any kind of prompting from click on this button.
Yeah, I don't think there's really any brand awareness they have to do anymore. So it's just a matter of making sure that they remain at the top of search results when somebody's looking for rentals in wherever.
I'm scrolling down, and to your point you made earlier where people are staying longer.
Yep.
Look at that third bullet point under business highlights.
Yep.
Guests aren't just traveling on Airbnb, they're living on Airbnb.
Not for traditional travel, but for long-term stays defined as stays of 28 days or more.
24, so nearly a quarter of all bookings are long-term.
That's impressive. It makes sense though, right? Because with all of these, I guess they're becoming less and less now, but over the past year, all of these quarantine restrictions, right? And so if you're traveling, like if you were traveling from New Hampshire to, I don't know, Virginia, you would have to quarantine in Virginia for 2 weeks. And so if you're quarantining there, you can't really go out and do much while you're quarantining, assuming you're doing it right, which obviously most people don't. But if you want to play by the rules, then yeah, you have to stay down there for at least 2 weeks in order to kind of be able to experience the area you're in, right?
I'll take it one step further too, Joe. I mean, with work from home, I mean, look at what we do. We could be anywhere. I
Right.
mean, we've recorded podcasts with you at ski lodges and you down in South. I mean, you don't, so you could do a long-term rental in someplace awesome. I don't know whether or not though, post-vaccination, that number starts to come down. I would imagine it would.
I think so too. Yeah.
Yeah.
Although who knows, maybe people who have enough disposable income where they can do that. They decide that they're going to go up. If they're in New York City, they decide that they're going to go up to Maine for the whole summer or something. Right? If they can continue to work from home, the only thing they need is a steady internet connection.
Yeah, true. And, I've talked to my wife about it and, we were like, I can work from anywhere. So why can't we get on a plane? Well, we can't because Europe won't have us right now. But I mean, theoretically, we could go to Ireland,
Right.
rent a place for a month and hang out in Ireland and, really embed ourselves. And honestly, if I had my druthers, that's what I would love to embed myself. Forget this 5-day travel or 7-day travel where you takes your first 2 or 3 days just to get acclimated. And your last 2 days, you're like all worried about when you're coming home, I mean, it's like,
yeah, it could just be the new way, assuming you can afford that. And
it's that numbers, how many people can afford to do? So that number is probably going to fall.
I would imagine, but who knows? If that stays at 10 to 15%, that's still significant, right?
No, it certainly gives you pricing power because you're taking capacity out of the system.
Right.
Okay, so what else we have? That's just blah, blah, blah. We're all just, we're awesome. We're ready for you. Educating the world about what makes Air. Okay, so 2021 plan. Educating the world about Airbnb's difference, recruiting hosts and setting them up, simplifying journey, delivering world, blah, blah, blah. That's what you'd expect them to say, right?
Right.
We're going to grow our business.
Special announcement. Most comprehensive update to Airbnb service in 12 years. All right. That's completely non-informative.
Yeah, that doesn't tell us much as a shareholder.
Yeah, I think we're getting to the
this is a lot of
portion of this.
Yeah, a lot of marketing stuff here. 55% of hosts are women, 58% of super hosts are women. I wonder if they give us a number of how many hosts there are. They say?
I'm sure they do somewhere.
I think someone on Twitter said that there's like 4 million hosts or so. I could be totally wrong.
I bet I can just Google it. Let me just Google it.
Yeah.
How many Airbnb hosts are there? 2.9 million in 2019.
Okay, so 4 million wouldn't be a bad guesstimate.
Yep.
And if you think about it, I mean, there's way more than 4 million households on the planet. So there's probably a lot of people here who aren't, but maybe could still be still consider.
I mean, I live in a neighborhood where a lot of people's homes are either seasonal or they're second homes, vacation homes, or even just straight up vacation rentals. And a lot of the time, in fact, the house across the street from me, the lady only lives here 5 to 6 months out of the year, and the rest of the year she's in Florida. So that's an untapped market. Nope, house is completely empty.
Yeah, so I mean, that's just money just waiting to be tapped, and I'm sure there's a lot of people. Maybe during the COVID too. I mean, people didn't want to do that; they were resistant to it because they didn't want to have a whole bunch of strangers walking through their house, right? But we get to a point post-COVID, maybe we'll start to see that open up, and that obviously would, that could be good.
Absolutely.
All right, what else do we see in here? Anything else that we should talk about?
Let's see.
Let's get down to the nitty gritty. Let's see if they have
world-class service
tables.
We already had these numbers.
Kind of what we just talked about with those gross booking value numbers and everything else. North America's strongest region. Seems like
that makes sense because we didn't really have lockdowns all that much.
Yeah, and if you look at Europe and they're shouting out a couple different places and where pandemic is still raging and they're not nearly as far along in vaccination as we are. So that could remain a drag for a little while longer. And then What else do we see here?
Domestic travel strong in Mexico and Brazil. Yeah, we know that the vaccination rates in even the developed countries in Asia is very, very slow.
Yeah, India especially still got a huge problem.
Oh yeah.
And then if you keep going down, let's see if we can get to. Okay,
We
so
already
here we
saw
go.
those
That's the
numbers.
1.1. And there's significant items we already talked about.
Yep.
So basically what they're just saying is, hey, okay, we're making headway. So Q1 of 2019, oh, that's an interesting comparison. This chart right here, Joe, at the top.
Yeah.
You know, if you compare to pre-COVID, Q1 revenue was 887 million versus 839 million in Q1 2019. That could be instructive.
That's surprising to me. Oh, this next chart is brutal.
Yeah, but again, it's that you got to subtract 782 million of that as potentially one-time events. So
yeah, it's still more
still loss, losing money
more than 2019.
Yeah, losing money.
Yeah,
no question.
Absolutely. Ebitda, significant improvement though.
Yeah.
All right. Anything else you think we can?
No, I think we can probably pivot. Let me just look at real quick. So the revenue of 887 million, that was a beat. Street was looking for 107. That beat the street by 172 million. And then probably not surprisingly, the EPS missed.
Yep.
Because again, you had all those one-time items, some of which weren't forecast and probably weren't built into analyst models.
Right.
All right. So beat on the top line, missed on the bottom line, and revenue is good, but losses, they still have some work to go before we can say they're profitable. All right.
Yep.